Hello, it's Adil bringing you an intermarket analysis perspective on the FTSE 100. Obviously, we're closed, 16:30 close. Now, where exactly are we heading? Okay, so let's try and sum up from a fundamental perspective first of all. As you always know, I always cover fundamentals first before moving on to technicals. Okay, so basically, as you can see here, Russian MISEX down. Down quite heavily today, down 1.7%. Okay, so basically Asian markets down overnight, negative, risk off. Obviously, as we know, with regards to the Asian markets all down. With regards to geopolitics, that obviously is centre stage again. Basically, we've had the situation obviously play out with regards to Russia, Ukraine. Mr. Poroshenko accusing Russia and NATO accusing Russia of basically invading. There's a tweet just retweeted now. US are discussing response to Russian involvement in Ukraine. Russia has stepped up presence and escalated aggression. So that's obviously not very good, is it? You don't want to be reading that headline if you're long. Okay, so that basically doesn't bode well for the markets. So that started off this morning. Okay, so that's basically the situation this morning. So a risk off there. Okay, so geopolitics, socioeconomic concerns. Obviously, the markets are selling off. Okay. Also, the narrative with regards to yesterday, you had the argument from the ECB stating that initially they put out a message stating that they've hired this chap called basically a firm known as BlackRock to advise them with regards to ABS purchases. Obviously, everybody's interpreted that post-Jackson Hole speech with regards to Draghi as QE. Obviously, everybody's drinking the Kool-Aid. Then all of a sudden, another message came out from the ECB because they realised everybody was was long to the teeth in equities and expecting QE, and because they wanted to make the expectations realistic, they put out another message stating that the bar was too high for QE at present. And obviously there will be no QE next week, and obviously that caused expectations to shift and people disappointed, and the QE trade obviously fell apart. Okay, and because the QE trade fell apart, then obviously that caused the markets to reverse in the opposite direction, and obviously we had a sell-off this morning. Given the fact that there's no QE now to obviously with regards to the Yellen put, so if there's no QE put or Draghi put, then obviously the stock markets fall when economic data comes out weak. So it's not about weak data confirming. Or you're buying in anticipation or buying in expectation of QE on weak data, so i.e. bad news equals good news, i.e. the QE trade. That obviously didn't work because obviously the European data came out pretty weak, German data came out weak, the inflation data wasn't as weak as everybody expected, which again doesn't really justify the QE argument, although the other economic data certainly did. But given the fact that the bar is so high, and given the fact that they've neglected they're going to do QE next week, and again it's in limbo, Mr. Draghi continues to dangle the carrot. Again, that's uncertainty. It's best to take profit given the fact that we've had quite a stellar run. Okay, so that's the scenario. Geopolitics, socioeconomics, both negative. Therefore, obviously the bias remains down. Hence the reason why the FTSE itself had a bearish engulfing candle, as you can see there. Bearish engulfing candle obviously held horizontal resistance, so we can see that the run's over now for the FTSE. So everybody must more than likely be positioning for the short side based on just looking at a technical pattern. So if you say that, if you're in the camp that you only follow technicals, I understand. From my perspective, I don't understand how you trade. It's very hard, but if it works for you and it's doing and you're producing results, give yourself a pat on the shoulder, keep going. Adhere to your process, obviously keep good money management, good risk management, and you'll always do well. Okay, so but I trade based on intermarket analysis. I have to base my trading decisions on news flow because majority of traders are obviously hedges, etc. They trade based on the news, or they have some reliance upon news. Okay, for confirmation. So okay, so basically your technicals here, horizontal resistance from the FTSE 100. Let's have a look at its pairs. FTSE 250, again horizontal resistance. Let me just delete this. Part of my mentoring, I think I was messing around. Okay, so basically, obviously if the QE carrot was dangled, then that bull flag would certainly have played out, and that wasn't the case. So okay, so horizontal resistance, bearish engulfing candle on the FTSE 250, so therefore it's bearish. FTSE 350 again, So all three major indices for the FTSE itself are indicating bearishness, therefore we go lower, okay? And that's basically where we stand with regards to that. And as you can see, horizontal or diagonal trendline resistance as well. Okay, so that's basically where we stand, okay, with regards to the FTSE itself, okay. Now if you look at the intraday charts, okay, with regards to the FTSE 100, so if I bring up my chart of the FTSE on a 10-minute chart, so we've had this rising contracting wedge pattern which we've broken out of, which again is bearish, okay, given the fact that we've broken out and we've held intraday, well, we've held a double top resistance there. So what pattern do you see now? So given the fact that we've got unfilled gaps below, so I can basically see a H&S formation. So that's basically what I see right now. So you've got your shoulder there, you've got the head which has been put in, and you've got the right shoulder obviously which was created, and obviously this escalation or geopolitical escalation, etc., with regards to Russia, Ukraine, and the meeting obviously failing to obviously bring some sort of truce together, will definitely cause this gap first of all to be filled. So this gap is at 6775, expect that gap to close. The head is at 6830, the neckline is around 6790, so you're looking for a 40-point drop, so you're looking for around 6750, the target around that region, okay. If you look at your 10-minute chart of the FTSE 100, let's see what we see there. Yes, I was trading for that gap to be filled, but given the fact that we've got geopolitics and socio-economic concerns, that's highly unlikely now, okay, for that gap to be filled. So whenever you have an inverted head and shoulders pattern that fails, what happens next? It's a emotive sell-off in the opposite direction. So basically the move will be lower, okay. And given the fact that we've got this unfilled gap that needs to be filled at 6775, obviously expect that to be filled. That's basically the thought process behind that, okay. So that's basically what I'll be expecting, for that gap to be filled below, and obviously a risk off scenario ensues, okay. That's basically what I'm expecting. Right, that's the analysis that I've obviously sent subscribers on live analysis service. Those of you that want to join the live analysis service, you're more than welcome to. There is a 1-week trial for all new subscribers. The whole concept is obviously ideally you do need to take the mentoring program, which is priced at £300, which is a 4-week course via Skype on a one-to-one basis. Obviously that'll give you a good grounding of how I trade. I'll polish up your TA skills, your FA skills, and give you an insight or take you into the world of intermarket analysis. That will give you a very good grounding on fundamentals. And then obviously the course is then designed to be in a cost-effective way of you learning in real time. Okay, so that certainly helps you. Obviously at £50 a month you can join the live analysis service and get access to in excess of 3 to 4 trades a day, sometimes even more, given how volatile the markets are. And the whole concept is, it is a video there, read it, I explain how I operate. I send my entry, exit, stop loss, etc. in real time. I give you commentary, TA, FA, etc., etc. I send you out analysis explaining each chart and why I've taken the trade. I mean, an example of that probably would be here, which is my latest trade at present. This is my Nasdaq trade, which is the latest. US data strong, ECB member stated yesterday, interest rate cut, etc., etc. So I give you FA arguments, I give you TA arguments, so I send you out analysis with charts. For example, here's a chart of the Nasdaq, just explaining as to why it's bullish and why it's bearish, etc., etc., to give you an insight there. So that was one trade I took off the 40-60 region, 40-59 region, obviously gap fill, obviously TA reason as to why the Nasdaq would rally, and that's exactly what's happened. So that's basically what I do on a daily basis. Okay, so the aim is to aid you, assist you in understanding the stock market in real time. Realistically, there's no other way to learn. If you want to learn how to trade in real time, folks, and learn it off someone who actually does trade in real time, and obviously trades for a living as well. So I share my experience day to day. I've been in this for almost 10 years now. Obviously average around 200 points a week. Recently, obviously the markets haven't been very kind, have been very volatile, so it has been quite hard to hit my 200-point target. But the days of obviously 400, 500, 600 points a week are long gone. It's really a challenge right now, but with the good comes the bad, and with bad comes the good. As long as you keep your risk and money management intact, you'll always survive and you'll always succeed in the long run, folks. Okay, so that's something that you can certainly take advantage of. There is, like I said, a 1-week trial free. Obviously, if you think it's something for you, think it's beneficial to you, then I only charge you £50 a month on a pay-as-you-go basis, and that's something that you can certainly take advantage of as well. Again, like I said, I don't think there's no other program out there that's so cost effective. The whole concept is, I mean, I can charge you £5 for a course, 10 grand for a course, like some of those charlatans out there. Well, some of them are genuine. I can't say they're all charlatans, but a lot of them are clowns. I've seen their work. It really is. It really is amateur. But again, I do it in the best way, I think, because I give you a foundation and then I teach you how to do it in real time. There's nothing better than that. Okay. So risk on, risk off, wax on, wax off. Hopefully that setup is an enlightenment. Hopefully it explains exactly where the FTSE is going. So watch out for that gap below at 6775. Okay, folks. Goodbye.